Well, good morning, everyone. Welcome to Accounting 233, Income Tax. And this is week one lecture. And my name is Paula White. I am a CPA and MBA. You can call me Paula or Miss White, whichever fits better. Just do it with respect. That's all I ask. I'm not a doctor, so Dr. White would not be appropriate. But I am your facilitator instructor for this course. My email is paula.white@independence.edu, and my phone number, that's my cell number, 760-710-7841. I will do my best to get response to you within 24 hours. Just know that I teach elsewhere, so if you try and call me at 6 o'clock on a Wednesday night, for an example, and that's when I start teaching, I can't get back to you until that course is over because I'm in front of students live. So I'm teaching at a couple different places, so I will respond as quickly as I humanly can. Just know that I have other things going on too. So let's see what Accounting 233 is all about today. The agenda. How do I prepare for the lecture? Are taxes an extension of GAAP? We're going to talk about how can I be successful in this course? And what is this week's homework? I'm going to give you an overview of the Form 1040. Some of you may also already be familiar with it with your own tax returns. But then we have 3 homework problems this week. And we have 3 problems that we're going to cover today that are similar to your homework. Not exactly the homework, but similar. And then we're going to do a little tour of the website, irs.gov. So before we get going, I'm going to get the chat box up because we have a new system in the classroom. It looks different this time. Instead of 9 boxes, we have 12 boxes. Did you notice the difference? And is everyone able now to get access to the textbook? I'm trying to find a chat. Someone hasn't tried yet. So 3 people said yes. So the book is up and running and 1 hasn't tried yet. Okay, good. So if you're having trouble with it, just know that the college knows about the problem and they're working feverishly to relieve that situation. So with that being said, why don't we take how do I prepare for the lecture? Well, taxes are totally different than accounting and GAAP. Taxes, in my opinion, are very rule-based, R-U-L-E, rule-based, which means it's based in codified tax law. Congress writes the law, and the president approves it, and it's a law like any other law that Congress passes. GAAP is written by and reviewed by accountants in the field. People who are accountants, professional accountants, develop GAAP, generally accepted accounting principles. Taxes are created by lawyers who are our congressmen and ladies, congressmen and women. Congress writes law, Congress writes tax law. Well, there could be some politics put into the taxes. There could be some social engineering being put into the taxes. Social engineering like medical marijuana is not a medicine that is approved for Schedule A medical tax deductions. Is that social engineering? Yes. They don't want to encourage it at the federal level, so therefore they're not going to give a tax deduction and have federal funds be impacted by someone using medical marijuana because their doctor prescribed it in certain states. So there are political aspects to taxes, but not from our perspective. It's on the perspective of writing taxes to begin with. So are taxes an extension of GAAP? How can I be successful in this course? So let's go to the course itself and nose around because it looks a lot different than it did last week. I hope yours looks similar to this. Can someone later on email me and tell me if the announcements are available to you? Because I've made announcements. I can prove it to you. Well, I can prove it to you slowly. But since this is still grayed, instead of black ink, it's grayed ink. That, to me, tells you that you don't have access to my announcements. And if that's the case, that's a problem. Well, it's going to take a while. My internet is not too strong here. There it goes. So let's go back to the home page. I don't want to have to change internets. Okay, so here we have 12 sections instead of 3 that we had before. Your daily checkpoints are very easy to get to now. They're right here. Sharp with your access to your tutor is here. So if you can't get a hold of me and things don't make sense in this class, and looking at the lecture and covering the problems that I cover in the lecture, if that all doesn't make sense, you still have access to a very good service within the tutoring center within Shark. Take advantage of it. Live session. 4 of you are on my live session right now, so that works. Course information is the course syllabus. ProQuest is your textbook. The Student Success Center. Oh, that should be your tutoring, not your Shark. This should be where the tutors are, the green box. Readings and videos, your help. Help is kind of cool. It tells you where to go based on the type of problem you have. So if it's a Zoom issue like this session, I'm the one who has to deal with that because I'm the one who sets up Zoom. Anything about Canvas, I don't have the ability to fix, but your buddy can help you with that. So this help button is a very nice new feature. Okay, speeding right along. Computer help, that gives you help because I believe you're still getting your systems from the university. Helpful hints, what they are and how do I use them. My biography is here. And the course content is your modules list. But I would like someone after this lecture to check your system to see if you have access to the announcements. I report that as a problem, but only you can tell me if that's an issue or not. And then we have the 4 weeks down here and actually what is expected. We have discussion boards as normal for 3 weeks. We have assignment for 3 weeks, and we have an assessment for 3 weeks. And the 4th week assessment is your final. And then you have a new quiz. Hi, this course has a new graded piece in week 4. Click here to learn more. So it's very basic, but it's to get good feedback, accurate feedback on your experience in this class. And it's going to be in every class that you take in the future. And it is graded because we just don't want people not to give their opinion. And we don't want people to say, well, the course bleeped. Well, give us more than that. How was it focused on you in your career path? They want you to be reflective on why these courses are in your curriculum also. Because with all that, it will make more sense to you why you're doing this. I'm going to check the chat. Oh, my microphone's cutting out. I'm going to move to a different room. Meanwhile, I'm going to move to the room that has the modem in it. Hey, walk this way, everyone. Are you all following me into the next room? Can you hear me better now? Is it getting better? Yes, okay, thank you. I apologize for that. It's not bad, but I don't want to miss anything. I don't want you to miss anything either, Dennis. I want you all to earn your A's. Okay, so I'm going to put this back down. How many of you are interested in income tax as a potential career path? And it's okay to be honest. Okay, so we have 1 yes and 1 no. Not? Okay, so we have 2, probably have to do it because you're an accounting major, is that true? Hi, Kalia. Okay, so we have 1 who wants to be in taxes, 1 who is still evaluating, and a couple says, taxes aren't for me. But you know, different parts of my career, I either hated taxes or I love taxes. And I've even developed my own CPA practice in Illinois, and part of that business was tax returns, and I like parts of it and I don't like parts of it. But I'll go through that in a future. Hi, I love taxes. Good, Heather. Do you have experience in them? Great. Okay, so we have a second expert here in the room. So you keep me honest, okay? Okay. The pressure's on. Heather's here. Anyway, so that's the course. So the question is, how can I successfully, what was my question? How do I prepare for the lecture? Taxes aren't, they have a logic to themselves, but the logic is established through the laws that Congress writes. So they don't have the same logic as GAAP does for general accepted accounting principles. So there's some logic to it, but it's very based on rules. You read the scenario presented to you, or the client comes into your office with an issue. They talk about the issue. And yes, business is all about word problems. So the issue is presented to you in words because that's a client's life. Then you have to figure out which law or which rule in taxes applies to that situation, and then you apply it correctly. That's how, with that information and that attitude, that's how you'll be able to succeed in the income tax class. Just know that it's rules-based, which may or may not be extremely based in logic. And it will be a little bit different than what you have had in tax and accounting before. So to prepare for the lecture, it would help if you would read the textbook and just get familiar with it. If it's not easily understood, then I can help fix the understanding through what I do in this lecture. If you come in with a blank slate, then I can't help you too much, because except just to give you some words that you've heard this before. So I suggest reading the textbook. I'm going to put people on mute because there's some scraping going on in the background, and it's not from my side. I think someone's eating, so I'm going to mute you all.
Miss Paula, we can't hear you.
Can you hear me now? This is getting frustrating. Where's my chat window? Okay, you can hear me now though, right? Yes, thank you, Heather. Whew, this has been crazy. Okay, so assignment 1, you're going to have 3 problems that you're going to be covering. 1 is tax rates. 1 is about filing status, dependency exemptions, and child credit. And the 3rd one is on computation of taxable income. Put them all in the same file, whether they be Word document or in Excel. I want you to use 3700 as a personal exemption unless otherwise directed, and you're given in your course the 2012 tax table. That tax table is the one that you need to use for this work. You'll still be doing the correct tax information. It's just a different, between this and 2015 for this next tax season, there's little difference except for maybe some of the rates have changed, but the concept and formats haven't. So what does a tax return look like? Some of you may have used personally a 1040A or a 1040EZ. The 1040EZ is the easy version of this, which is for people with maybe 1 W-2, no, a very simple, very basic tax return. A 1040A is used for people who do not itemize, and a 1040 can be used by everyone, but it's just easier to use a 1040 when they have more complex issues. But the 1040 is what we're going to be focusing on here, and this is what you're going to have to be filling out for your final assessment. The first section right here is your name. If you're married and filing a joint return, your spouse's name and the related Social Security number, your home address. The presidential election campaign, you could choose by clicking on this box to have $3 of your taxes going into this fund for the presidential election campaign. Your tax return, your tax amount due or your tax refund will not be affected by the allocation of this $3. So do you want $3 for each person on this return to go out of the government coffers into the presidential election campaign funds? That's your own personal choice. We're going to talk about filing status. Single is single, or widowhood after the first year after the death of your spouse. Married filing joint, even if one person had an income. You can married filing joint, or if you're married and want to file separately, where the one spouse files their return and another spouse files their individual return, but you have to put the SSN of the spouse here and choose married filing separate. Head of household, this is one qualifying person. You have to have at least a qualifying person who's a child. Usually they're your dependent, sometimes they're not, but it's you as a head of household has another dependent and they're a qualifying child. And if you're a qualifying widower with dependent children. Exemptions, you should take yourself as an exemption. Basically, you count the members of your family. Yourself, your spouse, you check these 2 boxes, and over here you put a 2. If you're single like I am, I put a 1, and I only check box myself. You list your dependents, first name, last name, and their Social Security number and their relationship to you. and whether or not they're under 17 qualifying for the child tax credit. And that would be a future chapter. So about, I don't know, 10, 15 years ago, they did not have this section for dependents' Social Security numbers. They just had put down your dependents' names, first and last name, and the relationship to you. And then you would put over here how many people were your dependents. Then they put in this section to make sure that the dependent's Social Security number are on your tax return. What happened is that the year that they put that in, I don't know how many hundreds of thousands of people dropped off the dependents. How many dependents dropped off of all the tax returns? Because they didn't have Social Security number. What type of dependents would you have that could not qualify for the tax return? Yes, Bowser the doggy, and Kizzy the kitty cat, and Sambo the turtle, and Tweety the bird. So people must have been putting all their pets and fake names here to drive the exemptions. But when they had to get a Social Security number for those entities, an animal cannot get a Social Security number. Okay, the next section here is right below it. This is the 1040, the top section of the 1040. Here's the middle section of the first page. And this is where you put all the wages and incomes. Wages, salaries, and tips. These are your W-2s. Taxable interest, tax-exempt interest, your ordinary dividends. Refunds are taxable if you counted it, if you had a tax refund. Tax refunds are taxable if in the previous year you had a tax refund from a state and you took that state, the high taxes you paid to the state before the refund, you took that off as the deduction on your itemized deductions. Then this year you have to put it in as a tax refund because you took it as an expense, as an inflated expense last year, so you had to take it as an income this year to counter the problem. Alimony that you receive is income. Business income if you're a sole proprietorship. What if you buy and sell stock and you have a Schedule D? Other gains and losses, you have IRAs and pensions, farm income, rental real estate, unemployment compensation. That comes right here. If you get Social Security benefits, the taxable amount goes here. So it's trying to list all the income that you could possibly have. Then you come down to the calculation at the bottom of page 1 to adjusted gross income. If you're an educator, you can have some deductions because grade school education, a lot of times the teachers actually buy supplies for the classroom, and this is a deduction they can take for that. Health savings account, moving expenses, the self-employed person's pensions. All these adjustments are adjustments to income to come down to AGI, adjusted gross income. And AGI is what we're going to be calling adjusted gross income. Now I'm going to check to see if we have any chats. Oh, thank you, Heather, for handling Terry's question. Okay. Now this is where you have, I'm just going to go down to tax for the day, right here. Taxable income and tax. That's as far as I'm going to go with this today. Then you have AGI at the top, right here. And then, were you born before 1950? Was your spouse born before 1950? So you're able to take, if you're elderly, you can take additional amounts off, or if you're blind, or if you're both, you can take more money off in exemptions. If your spouse itemizes on a separate return, or if you were dual status alien, check here, but that's a whole different thing. Itemized deductions. I'm going to ask the group. What's the group? You keep hearing about everyone who makes a lot of money can itemize, and I don't get anything. I can only take the standard deduction, blah, blah, blah. Do you hear any of that type of conversation? What's your opinion on people being able to take itemized deductions versus standard? Or do you have an opinion? It doesn't have to be based on fact right now, but what do you hear about, well, I can take it off on my tax return, I can itemize it, and you're sitting there going, well, my person doesn't let me to itemize anything, I just take the standard. What is that what you're remembering from your tax returns, or do you have any opinion at all on itemized? And now everyone's quiet. No opinion. Okay. So let me show you where I was going with this. So you have AGI right here. This is all your income less those specialized adjustments. So this is your adjusted gross income. Now you could either take on line 40 your itemized deductions from Schedule A or your standard deduction. Itemized deductions, when we get there next week, itemized deductions include medical, it includes charitable contributions. If you own a home or have a mortgage on a home, it's the mortgage interest. It's the property taxes on that property. It's points that you may have had to pay to get the mortgage itself, and points are prepaid interest. Unreimbursed business expenses from your employer, and miscellaneous. It's all those itemized deductions, and if you have a lot of deductions, you can take them as itemized deductions to reduce AGI to come down to taxable income. Remember, here's AGI minus itemized deductions gets you taxable income. But what happens if you have a very simple life and you still have some charitable contributions, but you don't get credit for it? Do you? Well, you do, because you get to take the standard deduction. And in 2012, the standard deduction for a single person was $6,200. So that's the same thing as coming up with itemized deductions totaling $6,200 that you get to take as a reduction to your taxable income. Except you don't have to have all the hassle of trying to come up with and validate $6,200. But if you're single, your standard deduction, you get to take $6,200 off right here. If you're married filing joint, you could take $12,400 off on line 40. And if you're a head of household, which is you're single but you have dependents, you get to take $9,100 off here. So you're not losing anything if you cannot itemize. You can always itemize, but if you can only, if in my personal life, if I can only come up with $5,000 of itemized tax deductions, would I want to take $5,000 off here on my itemized deductions, or would I rather take $6,200 off as my standard deduction? Obviously, I would want to take $6,200 off from my AGI to come down to my taxable income instead of taking only $5,000. So everyone gets a benefit of deductions. It's just, can you itemize them or not? So then we come down to exemptions. If you make less than $152,000, you take the exemption amount per person, and this year was $3,950, times the number on 6D. And you put that amount there. So my number on 6D is 1 because I have no dependents, I have no spouse, I'm single, I have one exemption, so I can take off $3,950 right here on line 41. Just lost my mouse. There we go. 41. What is on line 6D? Well, 6D was here when we were doing the exemptions. It's yourself, your spouse, all of your dependents, and you come up with boxes checked in A and B. You and your spouse would be 2. Number of children who live with you, 4. So you could have 6 dependents here, and those dependents would be multiplied by $3,950. So you get a reduction to your income tax, your reduction to your AGI of almost $4,000 for each one of the children that you have. And then you come down to taxable income. AGI minus your standard or itemized deduction minus your exemptions gets you your taxable income. Then you calculate your tax. It's either going to be by the tax table or the tax rates. And then we'll stop right here today because that's the important parts. Okay, so let's go through your homework problems. This is a problem similar to your chapter 1, number 39. I'm going to check the chat box to see if no one's chatting with me. Okay, so this is similar to your problem 139, not exactly, but it's on tax rates. Letitia, she's a single taxpayer, and she had the following income and deductions for the tax year. Income, you had salary, business income, interest income from bonds, and tax-exempt bond interest. So income, she had $100,000 that she came to you as your tax preparer with. And then you asked her about her deductions, and she had $9,500 for business expense, itemized deductions $20,000, and personal exemption in this case is $3,800. So she had deductions of $3,300. So compute her taxable income and her tax liability, and then compute her marginal average and effective tax rates. So part A, you're going to take her $60,000 for income salary. You're going to take her business income of $25,000 and her interest income from bonds. You exclude the tax-exempt bond interest of $5,000. I scratched that through. So the total taxable income, or AGI at the moment, is $9,500. Total income at the moment. Then you have less deductions, business expenses of $9,500. Your itemized deductions of $20,000 and she has one personal exemption. It's worth $3,800, so $3,800. So now her deductions is the $33,300, leaving taxable income of $61,700, which is $95,000 minus 33, $61,700. And then you look up on the tax tables, and that's covered in your book. There's tax tables and there's tax rates, and you find exactly what $61,700 is, and it calculates to be $11,425. Here is a tax rate table. Basically, if your taxable income is 0 to $8,700, the tax is 10% of the amount over 0. So if you have $5,000 of taxable income on the tax return, $5,000, 10%, so you have $500, which is your taxable income. In this situation, she has $61,700. So $61,700 falls between $35,000 and $85,000. So the tax is $4,867.50 plus 25% of every dollar over $35,350. So every dollar that's over the lower limit, and here let's say it's $65,350, so there's $30,000. So $30,000 times 25%. 25% of $1,000 is $250 times 3, $750. So it would be $4,867.50 plus $750 will be your tax on that income. So the next question is compute Letitia's marginal tax rate. The marginal rate is the rate that would be applied to the next dollar of income. So for Letitia, she's in the middle of these two numbers. So her marginal tax rate would be 25%, because this $4,867 covers the maximum of the previous level. So for every dollar above $35,350, she has to pay a quarter for every dollar. A quarter is for taxes. It goes up to 28 cents, 33 cents, and 35 cents. So this is the marginal rate. Her average rate would be her total tax divided by her taxable income. Remember, her total tax that we calculated was $11,425 divided by her taxable income. So this is her average tax rate, which would be somewhere averaging the 10, the 15, and the 25%. And you would expect it to be somewhere in that ballpark, so it is an average rate of 18.52%. Now, what's her effective tax rate? It's the tax rate calculated only on income and the direct deductions of the income. So it's still the federal tax liability divided by her business income plus her business income minus her business expense. What was the 5,000? Oh, okay, I see what I did. 9,500. It's a 9,500, and you add back the exclusion of 5,000. So that added to be 100,000, and then we subtract off the expenses. So it's the $100,000 of total income, including the 5,000 tax exempt, minus the business expenses. So it is the life income of that person for that year. It does not include the itemized deductions or the personal exemptions. So based on the taxes divided by the income for that person, she has 12.62%. Did we lose someone? It's the fourth icon down on the left. I'm so sorry. Click the house at the top left and click on the other cell. Don't know. What was this conversation about? Oh, I cannot get the book up. Okay. Okay, so let's continue. Number 2-30 is another homework problem that you have. And that is where we have Tom, and he's a single taxpayer, and he's 18 years old. So the salary that Tom has is $1,800. He has interest income of $1,600 and itemized deductions of $600. So assuming he is self-supporting, that means he's not a dependent of his parents. He has emancipated himself. He is self-supporting. What is his taxable income? Or he is a dependent of his parents. So what is his taxable income, assuming he is a dependent? There's a difference here because he is 18. So if he's self-supporting, he has salary of $1,800 and interest of $1,600 that was given. So his AGI is $3,400, the sum of these two. He has his standard deduction of $5,800. And he has one exemption of $3,700. Regardless, he has zero taxable income because his AGI is way less than the $10,000 he can get from his standard deduction and his exemption. If he's self-supporting, he gets his standard deduction and he gets the exemption. The parents do not get the exemption. Now, what happens if he is a dependent of his parents? And per the book, the dependent standard deduction is reduced to a greater of $950, or the dependent's earned income plus $300. And this was the case in 2011 and 12. I think it's now $350. So let's continue the calculation here. He has salary and interest, AGI of $3,400, the same as the slide before. His standard deduction is $2,100, which is his earned income. He earned his salary. His interest is passive. This is earned income because he went to work and changed time and effort for payment. Interest is a passive activity. As time passes, you earn income. So it's $1,800 plus $300. So that's how we get the $2,100 standard deduction. The exemption that he can take is zero. If he's a dependent on his parents' tax return, the parents get the exemption. Only one exemption per Social Security number is allowed in the tax system. So he has no exemptions. So his taxable income that he has to pay tax on is $1,300. $3,400 minus $2,100 is $1,300. Okay, so is this making sense? To anybody? Good, good. Would it also help if I posted these PowerPoints? Okay. Okay. Then I will. Now, the third question that you have is you have 5 scenarios and determine the following. You have to figure out the tax form for each, the filing status for each person. It's either going to be single or head of household, and the number of personal or dependency exemptions available, and the number of children that qualify for the child tax credit. And what I'm going to do is have you apply what you read in the book to figure these out. They should be pretty basic, and apply what you see in the chapter to just answer these in a form of. It would help me if you don't do it in a paragraph. It helps me if you can do it in a table. The table would have, the first column would be tax form, filing status, number of dependents, exemptions, and number of children that qualify. So if you can just do it in a table, that's easier for you and easier for me. In the meantime, I'm going to check the time. Okay, what I want to do is to let you know about something. If you go to irs.gov, you'll be able to see how to become an enrolled agent. And an enrolled agent is someone who doesn't have to be a CPA or an attorney. You can pass an exam, a tax exam by the IRS, and you will be a tax professional in the eyes of the IRS. You'll be able to be in business doing taxes, and you'll be able to be in business going in front of the IRS on behalf of your clients. Now, what you need to do is obtain a PTIN number, which is a prepare a tax identification number. And what that is, a few years ago, we would have to put our actual Social Security numbers on the tax returns. Well, with identity theft, that becomes an issue. So with identity theft, what they did, they allowed us to purchase for, I think, $69 a year. We can purchase professional tax identification numbers, which has nothing to do with our Social Security number, and therefore our identity is more protected. Could you just imagine, on every tax return I prepared for many, many years, my personal Social Security number is on those tax returns. That is a huge breach. But this is a really great career for someone who thinks they could love taxes. To have a business that you work hard for 3 to 6 months of the year, and the rest of the year you have a part-time office. It's ideal. So check out becoming an enrolled agent at irs.gov. And let me take a few minutes and go to that site. I'm going to type irs.gov. Regardless of if you want to go into taxes or not, this is an excellent, excellent, excellent reference for information. So what I did, I just typed in enrolled agent, E-N-R-O-L-L-E-D, agent. Really? And here we come up with the Enrolled Agent Program. And explore it. It could be a life changer for you. Also, let's go back to the home page. Well, oh, really? Okay. So here is forms and publications, hot topics, how do you fix a mistake on your tax return, how find answers to your tax questions, the Affordable Tax Care Act for and the tax provisions associated with the Affordable Tax Care Act. What type of tools do you have? How about, where's my refund? How do I pay into the system? There is an October 15th filing deadline right now, and then the tax season is over with for this year. So check out forms and pubs. Check out for Tax Pros, even though you're not one yet. It's great information to look at. They're launching a preparer directory. They fight fraud with new direct deposit limits. This is the PTIN guidance. This is the Social Security number replacement. Tools for client assistance. All this is great information for the professional tax preparer. So I'm going to say that's all I have, but I'm going to open it up to the folks in the room. It looks like the textbook information got shared, so everyone can see it. Does anyone have any questions before we sign off? Thank you for telling me that, Sherry. I will make a bigger issue on the announcements, because I've made them. They're just blank, so you do not have access. I will follow up on that one, Sherry. Thank you. And Dennis, have a good week then. Remember, I'm a source as well as your tutor, and they do know their stuff. So go for there. So thank you, and I'll see you next week, I hope.